Hi. Uh, Good morning, everyone. This is Anae Augustini with CID Insurance Programs. I want to welcome you today to our webinar, our workers' comp webinar called Successfully Build a Workers' Comp Book of Business. Our instructor today is going to be Darby Fisher, who's our work comp underwriter and specialist, and Jacob Cole is our marketing coordinator who works behind the scenes and makes everything move. So let's talk about our logistics. So everyone will be able to hear and uh, see, right? But you will not be able to speak because you'll be muted. But your voice is important, so please pose your questions in the chat at any time throughout the webinar, and we will stop and answer them as we go. And there isn't any question that's, that isn't a good question. A short survey will pop up after the webinar, and we'd really appreciate your feedback there as well. So let's talk about our agenda and what we're going to learn today. So we're gonna go back to some not basics, but Darby's going to be teaching you how to be competitive with workers' comp, and she's going to talk about how workers' comp is performing within commercial insurance, like that coverage and how it's performing. In fact, I'm going to start with that first thing before I turn it over to Darby. Second, she's going to talk about the most common submission mistakes that are made, because those are the things that can get in the way of getting a quote in a timely manner. And then let's discover that she's going to delve into the competitive edge for that you really need to have to successfully write at least your little larger premium workers' comp policies. And then she's going to talk about how to write stable business that stays on the books, because if it doesn't stay on the books, then it's sort of like a revolving door of a new business that falls off the books. So let's get started. Okay, I'm going to spend a few minutes on how workers' comp compares to other commercial insurance, as we are all feeling it. For those of you that write commercial insurance and make your living doing that, right? It really has become a harder to place arena with rates reflecting ongoing higher premiums. Premiums are going through the roof in many different coverages and classes of insurance. So some of it is being affected greater than others, right? And so we're seeing that some areas are not as much. We're seeing significant increases on the professional liability arena. Certainly all of us are being impacted by the property rates for habitational or lesser's risk. And so it's not all coverages. Employment practices is going through the roof with a lot of claims activity, and carriers are pulling out. So it's all over the place, but it's not everywhere. The good news is that workers' comp is one of the most stable coverages in both underwriting appetite and the class code ratings. So it's still very competitive. It's a competitive environment to participate in. In fact, I would say that this is the place to focus, because this is the angle where you can get in and you can actually save. You can turn that head of the business owner to consider saving some money if you're able to offer a more competitive quote. Let's also mention that there is a trend for business insurance being less open to changing carriers. So I think having a competitive coverage like workers' comp, focusing on that, is a great way to get yourself in the door and potentially have that insured come over to your side and let you be their insurance broker for their commercial insurance. So from here on, I'm going to turn it over to Darby for her to teach you some things about work comp.
Good morning, everyone. So I'm going to be talking about how to be successful with workers' comp. As the name mentioned, workers' comp is a great coverage to market and focus on with your business clients because it is still very competitive. So to start, let's go over the common submission mistakes on a workers' comp app that you and the insured can avoid. The first being a missing FEIN. It's one of the most common errors I see when receiving Accord 130 applications, and it's important to note that you cannot begin quoting with any carrier unless the FEIN is listed on the application. So that's a small but important thing to ensure that you or the insured is inputting that on the app. Ownership information should always equate to 100%. Sometimes I'm just receiving the owner's name and the title, or there's no ownership listed. So the owner's names, the percentage of ownership, the title of theirs within the business, and whether they wish to be excluded or included on the policy must be listed out. It's important we have accurate ownership information in order to avoid any problems at the time of the audit, as we would be obtaining exclusion forms for all eligible officers when binding the policy. So we want to be aware of all the owners in the case that the audit comes up. Let's say an owner didn't fill out an exclusion form, their payroll would be picked up at the audit and the insured would owe additional premium. So we ourselves, the carrier, we all need to be aware of all ownership within the business. If there's multiple locations and class codes, it's important those are broken out on the 130 so we know how to properly rate the business. Description of operations, that's typically left blank with the applications I see, but inputting as much information as possible about the business, it's extremely helpful when quoting with markets and can avoid time spent going back and forth inquiring on business operations. Lastly, loss runs or information on a lapse in coverage. Unless it's specified on the application that this is a new venture or their first time obtaining workers' comp, reviewing loss runs should be the next step that goes off in your head. If those loss runs that you do receive don't match up to the date in which the insured is wanting to obtain coverage, then there could potentially have been a lapse in coverage. So it's important to ask those questions. The reasoning and the date of lapse is required information to submit to the carrier. So focusing on writing clean business is important to keeping it on the books. When you get into worthwhile premium accounts, you don't just win them on pricing. I want to briefly reintroduce premium sizing and the profiling of small, medium, and large businesses. So those small businesses, they don't have as many exposures and the payroll employee count is typically lower. So rates are going to be more stable. Because of this, the majority of your book will be built on small businesses and building the policy in force count. Medium-sized business, that's the sweet spot, helping to build premium volume within your book. However, they do require a deeper analysis of the business in order to obtain a competitive quote. And your large-sized business, they have the greater accidental exposure and higher rated class codes. They will add fast production volume to your book, but they have a greater chance of being lost at their renewal. So they require additional underwriting and knowledge of the risk. So when you get into your medium to large size businesses, you start to recognize that being able to bind to the account, that competitive edge is going to be more than just price. So we're going to learn how to prompt the interest of a business owner to successfully gather enough information to propose a competitive work comp policy and then close on that. So as an underwriter, efficiently analyzing and understanding your risk is imperative to propose a competitive quote. So you need to be able to pique the business owner's interest by coming to the table with more than just price. Upon your review of the listed items, you should be able to know if you have a competitive market for this risk or not. The first, I urge brokers to obtain a copy of the insured's current policy if that's available to determine whether the premium and rates where they need to come in when quoting. The insured's deck page will reveal how their policy is structured, giving you an advantage over another broker who wants the same business. I know sometimes obtaining the current policy could be difficult, so even getting the target premium or the classification rates can still be a big help in knowing which markets to go to. That way you're able to get under the current premium and determine if the policy is structured correctly. You'll be able to research class codes and ensure these best fit the business operations. Physical loss runs are one of the biggest indicators as to whether you're going to have a competitive quote for the insured. With poor loss history, it's likely going to indicate the insured's experience mod rating is high, resulting in a debit on the policy. Therefore, it's even more important to know which markets apply additional credits or have competitive rates. Some carriers look for claim severity, others are making a decision based on frequency of claims occurring. So even if the insured has a poor claims history, you can still guide them in the right direction on how to turn it around by offering the carrier's loss control services to them. So success goes beyond just price. A business owner is more likely to write with you if they feel you understand the risk thoroughly and are working in benefit of the insured in more ways than just pricing. So your job is to save the business owner in more than one way. The list you are reviewing are some of the key work comp trigger points that will get the attention of the business owners. If your insured has exposures that are rated high, you can take the risk to markets where you know apply additional credits based on years in business, the territory they're located in, schedule credits for clean claims history, etc. Knowing your markets well will give you an advantage over another broker. And you can always expect any contracting, manufacturing, or residential janitorial exposures to be rated higher than other classes, just for reference. So in those cases, you would want to balance that out with markets who apply additional credits in helping you secure a bind. On the flip side, knowing which business profiles wouldn't qualify for additional credits. For those businesses that are under the minimum threshold, which is typically around $2,500, carriers wouldn't have the authority to apply additional credits. So when you're quoting this size of business, you want to take your risk to markets where the class code rate is competitive to offset that. Markets vary in terms of their available credits, so getting familiar with those is going to be really beneficial to you. With risks that are assigned to higher mod or have poor claims history, your competitive edge is to provide carrier resources and information on how to mitigate claims in the future and inevitably help to bring their experience mod down, which will be discussed in more depth throughout our case study. Some carriers make their decision based on the severity, others on frequency. So if you can help the insured identify the cause of the claims occurring, you can provide recommendations and resources for the business owner. And then potential misclassification of employees could lead to problems at the time of the audit. This doesn't happen too much, but it is something just to keep your eye on. Just using their current policy just to ensure that the employees are classified correctly. If they're not, you could potentially save the insured some premium if they can be recategorized. If I'm ever unsure of the correct classification, I'll always double check with the WCIRB for California risks and the NCCI for risks outside of California. Gathering a list of duties that the employees perform can also be really helpful to you when classifying. Let's say you get an Accord 130 and the business owner doesn't know the correct classification. Getting that list of duties, you can go to the WCIRB or the NCCI, and they can help you determine the best classification for them. So once you've obtained a strong competitive quote from your markets, how do you win the work comp business? So you need a strong close in order to secure the bind order, making a formal presentation that shows premium is competitive because of 1, aggressively priced rates, 2, the insured's experience mod, or 3, the clean claims history. By being able to speak knowledgeably about classification and rates applied, or carrier services such as loss control and claims management will help you in securing the bind. The message to be getting across to the insured is one, you help to show them to see what's wrong with their current policy and what they can be doing better. And two, the broker they're working with may not be analyzing the business correctly, ultimately costing them more money. So as of current, I'm seeing these types of business exposures have the most success in competitive rates and premium. I just wanted to touch on them briefly. So these are the great classes of business to go after right now, and there are many ways to market them. I'm just going to touch on a few restaurants. They're more palatable, easy to quote. Restaurant exposures would be those deli shops or small payroll fast food chains. Um, Whereas a larger tavern or bar is going to require further underwriting review. Contracting markets have been more competitive rate-wise than I've ever seen them. Electrical and plumbing, really any artisan contractors are great to write if you know how to approach the business owner. Whereas the markets for maybe tree trimming or roofers, they're a lot tighter. So going after business exposures that are trending as competitive classes will help to build your book of business. So now that I've talked to you and you've seen some of the competitive classes of business, I do want to go over the harder to place trends. So as an underwriter, the worst thing you can do is chase business around. You want to strive to write clean policies that you have competitive markets for. These types of business structures are common submissions that are harder to place. When receiving a 1099 exposure, those are difficult only because you need to see how great the 1099 exposure is in comparison to W-2 employees. Owner-only policies, I have been receiving a lot of submissions lately. I know the rules are changing with contracting risks and they're requiring owners to get coverage even without employees. We actually do right now have one market that's opened up and is willing to quote, but it is a little bit tighter in order to find as many carriers who are willing to write that. For a business that uses subcontractors, HOAs, property management, contractors, that's where you're going to see it happen the most frequently. It is mandatory to obtain a percentage of subcontractor exposure as carriers can only write up to a certain amount. Experience mods are more lenient than the other ones I've mentioned. We do have markets that are willing to quote higher experience mods upward of 120%. So if a carrier sees a decline in claims filed or they have knowledge of the business putting into place safety meetings or more supervision, they are willing to write the risk. Post-COVID, it's become clear that a lot of the claims that were filed during COVID are now hitting the experience mod and increasing the premium. So take advantage of that by approaching businesses with knowledge on how to mitigate future claims. The main point of this is to deter from chasing down or spending ample time on submissions that are likely to decline. So you want to know what good business is and what's not, what risk can I walk away from, and which are worth writing. The listed items are reoccurring problems that I see that get the attention of business owners. So by staying on top of this and understanding declining trends in workers' comp, it will give you a competitive edge amongst other agents. So you can't survive on small policies alone. So knowing how to sell a risk to your carriers and the business owner is imperative to building your book of business. What items are going to be of value to you when analyzing and quoting a risk with carriers, and how does this help give you a competitive advantage over other brokers wanting the same business? So the bulleted items give me a general idea of the business structure, its contracting. So there's going to be additional details you should be looking for when going after like a higher exposure business and a larger size premium. And what strategies you're going to be able to utilize to obtain this. So when you get into the medium, large size business, additional analysis and underwriting is required to obtain a competitive edge outside of just pricing. So there's more determining factors on whether the carrier will write the risk or not. as opposed to an exposure such as like a retail store. So the first thing I'm wanting to determine is if it's an artisan or general contractor. That way I can get an idea of how many markets I'm able to quote the business with. So this one is an artisan. It's carpentry and a few other types of artisan contractors, electricians, plumbers, framers, painters. Um, those are really great risks to go after. A lot of markets have super competitive rates, and CID actually specializes in artisan contractors. So if you have any, go ahead and submit them to us. General contractors, they're going to be those harder to place. Risks for a few reasons. They have a higher tendency for more claims to occur. Potentially the subcontractor exposure exceeds the carrier guidelines. So artisan contractors are a really good one to focus on. So with contracting risks, carriers may be a little bit more cautious to write these, but it doesn't mean they are all declined when coming across. You just want to be able to be knowledgeable to the business owner and the carrier when presenting them with the application. So anticipating the questions that the carrier is going to ask you can be a really big competitive edge, getting to a place where you know what the carrier needs to provide you with a quote. So some things you would be looking for are, is there a subcontractor exposure? Are they filed with the California State License Board? Do they have safety training, and do they wear protective equipment? These are all helpful things. Looking at their physical locations and their payroll to get an idea of where the premium is going to fall, and then looking at the class codes as well. So there's two classifications for carpentry, and they're broken up based on hourly wage. This is something you'll need to be aware of when quoting any type of contracting risk. Typically, there's multiple class codes broken out by the hourly wage. So if I'm receiving an application, I want to make sure that those are accurate based on the wage the employees are being paid, so that way there aren't problems at the time of the audit. After ensuring that payroll and class codes are correct, reviewing the claims history and trade experience. So how many years of experience does the owner and employees have? This can also be a determining factor when asking for premium savings to be applied. So our case study has 5 years in business with 7 claims, 2 still open, and the mod is assigned at 132%. It's important to turn things around before the experience mod gets too high and will take years to get back under 100%, because once you lose sight of it, it can really escalate. And as long as claims are open, more costs can occur, and it will inevitably increase the mod. So getting those closed as quickly as possible will help to mitigate further claims and debits on the policy. So the competitive edge when presenting the quote is to offer carrier loss control services. So I'd be looking for information on the claims as to whether the injured employee still works for the business, if they've implemented any safety training or measurements since the claims occurred. What does the supervision look like within the business? If you're able to help the insured identify where the claims are coming from, it will be a huge help in stopping similar claims to be filed in the future, along with the carrier providing resources and a plan for the insured to put in place with regards to mitigating claims. So some of these questions are going to be asked by the carrier, and it'll be helpful to you when providing that carrier with additional information. Getting to know the business inside and out as if you're the one running it is going to be a competitive edge of yours to utilize. So
there's a question for you, Darby.
Yes.
How does this type of the insured affect their workers' comp policy?
So how does the business type of the insured affect their workers' comp policy? For our case study here, it's an LLC. So the biggest thing you want to look at is getting exclusion forms on file for all owners in the business. That's where the entity type really comes into play. So it's an LLC. Let's say there's 3 owners. I want to make sure I'm obtaining exclusion forms for all 3 owners at the time I'm binding this policy with the carrier. If exclusion forms aren't submitted and the policy year goes by and it's time for their audit to be completed, the owners that do not have exclusion forms on file, their payroll will be included in the final audit premium, and that can increase the additional premium due by a lot. That's the most important part when looking at the entity type and binding the policy with the carrier. Going back to the case study, so the business has a lapse in coverage, which isn't unusual these days as everything is slowly getting back to normal. We're finding in the last 6 months or so that a lot of contracting businesses are now just getting back on their feet and hiring employees again. So carriers are aware of the current industry we're in. And while in the past they may have declined a contracting risk with a lapse, they're more likely to quote the business and can still present a really competitive quote. From the underwriting information outside of the standard application, physical loss runs, all contracting risks are going to require a supplemental to be completed as it obtains the additional questions the carrier and the agent need to know in order to fully understand the operations of the business. So you can win an account of this size with this type of exposure, which is more difficult than other ones, by knowing how to deal with the current marketplace, being able to identify the additional services you can provide to the business owner. In this case, it's your ability to understand and help manage their claims activity by providing carrier loss control services and making the insured feel you're knowledgeable about their business and the carrier's business. So writing good business that stays on the books is the best way to be a competitive broker in the workers' comp arena. How you do that is by selecting stable, payroll-driven classes of business. Some of those include retail, automotive, restaurant, artisan contractors. As I mentioned previously, you don't win business just on pricing, so coming to the table with additional items like we went through will help to win the business. And once you've bound the policy, it's important to maintain a meaningful business relationship with the insured. That way they aren't seeing what other brokers are out there. Once you've bound the policy, it's not over. You need to continue the conversation throughout the policy term. Binding larger policies, they may be intimidating at first, but the more you continue to write and go after this size, the better you become at managing them and building your book of business. These are going to add fast production volume, and you'll have a successful book of business for workers' comp. And lastly, you can't forget about your workers' comp renewals. Binding a risk doesn't ensure you're going to keep it on the books. So each renewal you need to treat as new business. There's actually more on the line. You should still be looking to save the insured in more ways than just premium. And at each policy expiration, a mandatory final audit is to be completed. So assisting your insured with this is super important, as I do see a lot of problems with insureds not complying with all of the information requested. For subcontracting risks, insured should be submitting certificates of insurance that show workers' comp coverage, and ensuring the classifications are up to date. You're receiving accurate payroll and location information for their renewal. Reviewing their loss history throughout the policy term is also a great strategy to put in place so you can anticipate a premium increase or decrease depending on the claims occurring. And you can have that conversation with the insured further out to the renewal rather than just presenting them with a quote and maybe the premium increased $20,000 and they weren't unaware. So oftentimes that can occur, and it's really good to try and put a strategy in place so you can anticipate what's going to be happening. So take the time to review the renewal as it maintains the relationship with the insured. Oftentimes, brokers may bind a big account and then it's not touched again. That gives the insured an opportunity to see what else is out there. And that's how you're going to lose the policy at the renewal. So maintaining a relationship with them, and more importantly, the person who is the decision maker of the insurance, is imperative. And if you implement these strategies, you'll continue to write good business and keep that on the books. I'm going to give it back to Anae now.
That was great information, Darby. Thank you. I think you brought value to everyone that was listening. So I want to thank you all for joining us. Make sure if you haven't been to our website, we have so many broker tools on the website, and these are proposal templates, marketing, customizable marketing, flyers. We've just got a wide variety, and also we have upcoming webinars there, and we also have a whole library of recorded webinars based on coverage, based on class of business, that you could just pick from the inventory. They're usually 20 to 30 minutes, and and just listen to when you have a chance. You can have other people in your office listen to them, so that because they're educational and they're really helpful for training your staff. So make sure that you contact Darby in reference to any workers' comp questions that you have or submissions, and we look forward to doing some business with you. And for those of you that already do business with us, thank you. Have a great day.